Howdy, y'all. Market's still in the dip. In today's video, we're going to talk about the new impacts that are coming in and affecting the whole market across the board. But once again, the culprit is all over China. Once again. But now, it's all built upon China trying to make deals with other countries to circumvent America's agenda on trying to get better trade agreements across the board, to where now China is stating that any country that comes across and makes a deal with America is going to have serious consequences with Beijing. So, in turn, that makes uncertainty even harder on the markets because the performance is going to stay as negative as it can be, because now is smooth and all the countries that were coming to the table trying to make a deal with the US government have now started to slow up pretty heavily, because now they're wanting to hear what China has to say and to turn around and see if they can make a better deal with China than America. But honestly, China is mainly gunning for Europe. So the uncertainty is really down for China trying to help Europe make the decisions. And they're also noticing that the US dollar is losing its value, because we actually lost a pretty good bit on the USD throughout the day today, and it has slightly been falling over the past week. So, but right now we have Japan, Korea, Canada, and Europe, which are the four main frontrunners that China is gunning for to be able to create some kind of deal to sway them away from making a deal with the US government. So, but once again, a lot of people are not talking about how China is currently going under as well. So, we might see some daily averages. This is just the S&P, for instance. We might have some daily lows, and we might have some uneven averages across the day, or even coming in across the month. We've ended up losing about 600 just in the S&P, and we've lost just about the same out of Nasdaq and Dow, where the percentage drop loss is practically the same across all three greats within the system. But this is a very far cry from what China's ended up having to deal with, because not only is their currency plummeting, but their whole economy is going back to a more or less a 2008 of what America went through with its economic disaster and crisis during that period of time. So, but these markets are still being as uncertain as they are. They will end up coming back because America is in it for the long game, not the short game. Given America is trying to pursue and push forward a very strong agenda saying that we don't need you and you need us. Well, as true as that could be and maybe, a lot of countries are still thinking that they'd be all right and they'd be just fine not having to have America as the one to rely on. But in America's strive to be more energy dominant and more self sufficient in the coming months, and, well, in the coming years as well, it's going to continue to bring America's markets more at a stable rate than it is just going to continue to drop as it has. So we have more manufacturing coming to America, especially with Apple putting in billions of dollars, Nvidia putting in billions of dollars. Obviously, your Teslas are being built in America as they stand, but they're also trying to gear towards having all the products that make the vehicles and make the chips and everything else be done in America as well. That doesn't just include the manufacturing for the chips and all the jobs that that's going to create in America to get away from tariffs, but to also be able to bring up your mining operations, your ore, your steel, your lithium for your batteries, along with your copper for all your electronics, and then all of those main components that come straight out of the ground can not only improve jobs and everything else, because Trump has been able to completely reset the game with getting rid of Biden's big green new deal, that we're looking at drill baby drill and map baby map. So then it's going to create a whole new world for America to not only become energy independent and dominant as we were 4 to 5 years ago, but it's also going to continue to pursue and make the rest of America even more profitable for bringing all of these manufacturing back to America to get rid of the tariffs. So that means cheaper products and better quality products, because America is known more for making sure that the quality is there versus the quantity, which is something that's very hard for China to be able to say. So, but until all of that happens, the American economy is going to still stay slow, even though the Fed is expecting another cut in interest rates in the coming weeks for May. Those interest rate cuts are going to help, but the economy is still so slow, and with the volatility being still so high, that it's going to continue on this path. Now, do we exactly know where the bottom is? No. But as all of the major stock players and all of the major broker companies are saying, they're all stating that the dip was here, and that most people, whenever they seen that, just the S&P for instance, whenever they seen that it came down under 5,100, they started buying. And they believed that after they bought down here, that they sat and they said that they were going to wait it out until it came back down to it again. So I'm thinking that the big players are planning on a resistance on the whole market, because they're saying the S&P is going to resist off of the 5,000 to 4,900 just for the specific S&P. And then we're going to turn around and you're going to look at the NASDAQ and the Dow. And whenever you're looking at show for the Dow, this was just in the day for the Dow, where we ended up starting up here, up at right at 38,800, and it ended up turning down to where it came all the way down below 38,000. So once again, it's another 2.5% drop, but it's going to continue to end up having this up and down pattern as the uncertainty and the volatility continues. But with all this being said, between the Dow and between the S&P and also the NASDAQ, if the greats are saying that they're waiting for it to drop again to buy in again, that just tells me, and it should tell y'all the same, that they're trying to do what I've always told y'all, is to buy the dip, buy it while it's low, to get a better dollar cost average across your whole portfolio. And once everything finally gets to level out, then everything's going to come back up to where its normal operating range was, where, I don't know if y'all remember, but the NASDAQ and the S&P were way up high. Just 3 months ago, the S&P was at 6,000. So if you could only imagine buying at 5,000 now, or right at 5,000, even if you were to buy right this second in the post, you turn around and when the market comes back to normal and it comes back up to 6,000, it would be crazy not to get in on an opportunity like this. An opportunity like this for all three of the greats, that's not even counting on the small stocks that are being extremely disprofitable from this market volatility. It's dropping most stocks 5 to 10% a day, where it's only knocking these guys down 2 to 2.5%. So be on the lookout and double check everything and keep clicking, keep watching, and I'll keep you up with the news. So if you have a specific stock that you prefer, leave it down in the comment. If you like the video, drop a like and subscribe to be able to keep up with all of the new videos that I'll be posting day in and day out. So, this is the Stock Warden riding off. So y'all come back now, you hear?